Welcome back, everyone, to Cheddar. Mattress startup Casper gearing to go public. The company filed for an IPO Friday, planning to list right here on the New York Stock Exchange under the ticker symbol CSPR. Jannarone is the editor-in-chief of IPOEdge.com. John, it's always great to see you. Now, according to the filing, the company actually recorded about $312 million in revenue for the first 9 months of last year, but losses of about $67 million in the same period of time. So the timing of this, we've seen this happen all the time. Companies going public and they're making no money and losing lots of money. So for Casper, why now?
Well, I think you might be onto it there, Troy. I think that they're out of money and they need it. I mean, the timing is very suspect, right? We've seen a lot of companies with a similar loss profile struggle, so it certainly doesn't feel like an ideal time to go public. And I think there's a lot of competition for these guys out there. So the idea of them returning to profitability or reaching profitability quickly is very questionable to me.
You had a company in purple that went public recently on the NASDAQ. I believe that was last year, and the company hasn't been faring extremely well. What do you think Casper can do to try and spin its own positive narrative when they do go public? And let me correct myself, purple is up since that first day of trading by about 90%, but it was rough goings in the early moments of trading for them.
Well, Brett, I think that the only thing they can really do here to ensure success is price the deal right. But what that might mean is they have to price it considerably below where they last raised money in their last round, which was a valuation of $1.1 billion last March. Investors don't tend to like that, but I'm not sure they have a choice here. And the world has changed a lot in the last 9 or 10 months.
So who wants to buy, right, the stock of a company that is losing this much money?
Well, I think if you price it properly, it's not like this business is dead in the water. I think it can work, but gone are the days when you could sell shares of a company like this at 5 or 10 times sales. They might need to be more like 1.5 or 2 times sales, and it's just more realistic.
Right, and I'm looking at a tweet from Derek Thompson who broke down sort of the unit economics of this based off the filing. The company's buying a mattress at 400, selling at 1,000. He does the math, and they ultimately lose about $160 per mattress. I mean, this doesn't seem to be sustainable. What can the company do to turn things around so that it's not burning money like this?
I mean, look, at some point they're going to have pricing power or introduce higher margin products, right? I mean, right now they're out there trying to grow revenue as much as they can, but it's the same old story. You grow quickly, command market share, build a brand, and then maybe you can sell more expensive stuff or just charge more. But in the meantime, I went through their filings and they themselves named 7 or 8 competitors. This is not an easy business, and it's not entirely clear to me why this mattress is so special.
$15 billion mattress industry, that's grown up over the past few years, especially with the disruption that a Casper brought, one that Purple as well tried to hop on top of. And so the international expansion opportunities, are they there to the extent where they could come to the public market forum and say, hey, we're looking overseas and seeing even more opportunity where there's a churn in the type of mattress that people are looking at and one that we could deliver on?
Yeah, there could be, Brad, but I wouldn't get too excited about that until I see success here first. I mean, what gets me about these guys is they've got a pretty deeply negative EBITDA margin, right? It's narrowing a little bit. It's negative 17% versus 22% in the 9 months the year before. But I wouldn't bet the farm on them having success in another country until they prove themselves here. Again, I don't think that this business is one that can't work. I just think that getting the valuation that a lot of these unicorns got last year is not realistic for them, and they're probably going to have to accept that.
Yeah. Tim and I earlier today had compared this both separately to Blue Apron. The amount that they have to spend on customer acquisition, I know you like talking about this as well, and the filing actually did have an unusual warning saying that using influencers for marketing could materially and adversely affect their reputation, and not to mention the cost of marketing itself. I mean, is that not a concern? You don't seem that much you don't seem that concerned about it, but if you think back to Blue Apron and how much they spend on marketing to acquire these customers, and Tim made the point that for Blue Apron at least you would come back and buy more things to eat. But once you buy a mattress, I mean, do you need more sleep masks and pillows and dog beds?
That's a good point. I suppose there are only so many mattresses you can buy, right? And these influencers are not cheap. I will say even the use of influencers to begin with kind of raises questions for me. They also have, I'm not sure that they would admit that this was part of their marketing plan, but they have some high profile investors like Leonardo DiCaprio and Ashton Kutcher and so on. I mean, that can be a bit of a red flag to me when you try to bring in investors who know these celebrities because people in Hollywood own the stock. So I do agree with you, Joy. I think that's I think that is a concern.
All right, going to be a company that we keep an eye on, especially as they ramp up towards that IPO, as we know you will. John Jannarone, editor-in-chief at IPOEdge.com. Thanks always.